Friday. Welcome to the morning show here on Stock Market TV. Spencer Israel, Steve Strazza. No JC again. He is flying back from Toronto. Is it Toronto or Toronto? Like the locals call it Toronto. I don't know. Whatever. He'll be back on Monday. Regardless, got a good show for you today. We'll have Louis Sykes join us as he does every Crypto Friday. We'll have Kenny Glick stop by, and we will have Chris Verrone from Strategas Securities. He will be on at around 9:15, maybe 9:10, 9:15. And the question of the day, first off, what a week it's been, right? I mean, hats off to the Bulls this week, at least so far. But it's looking like pretty good week. Best week of the year, maybe? Question mark. We'll talk about that, but really the question of the day is, do you go with the stocks that had, or the groups that had the biggest bounce, or the groups that held up relatively well during Volmageddon? I don't know. Steve has questions and some answers, I hope. So that's what we'll talk about today. So smash the like. Good morning, chat. Let's boogie. Hello.
Hey.
Oh, it's a Strazza show this morning.
Just had a fantastic quiche from the French bakery.
Quiche is good.
Quiche Lorraine is really the best quiche, I think.
Yeah, quiche is solid.
So yeah, happy Friday, Mary. Happy Friday, everybody. It's a Crypto Friday. Have the bull market shirt back on today. Because exactly what you're saying, Spencer.
What a week.
The Bulls scored some points this week. I'm excited to talk about it. Steve, you never got back to me about Connecticut and Twitter DMs. Shit. I didn't see it. Yaka, where'd you go? I hope you went to Colony or you hit New Haven. I don't know where in Connecticut you were.
Yeah, I was going to say, even I know New Haven has good pizza. So.
Oh, sorry about that. Yeah, I didn't see the DM. It's probably hidden. I hope you had good pizza. I really do. I hope you had great pizza. That's the right. Yeah, it's bull market quiche. Steve's turnaround. I'm not, but there's pockets of strength in all cuisines. But broadly speaking, no, still not coming around for the French. I think they make tremendous baked goods. The cheese is phenomenal. The wine is lovely. I hope I never find myself in Paris again. We'll go to the French Riviera. What? Seriously?
Yeah. I've never been to France, so I can't speak on the food in France. I've had French food. It's good. I think.
Don't go.
I don't know. Everyone says it's dirty, but then people, I don't know. Whatever.
Morning carbs are for psychos. I would argue that a quiche is Perlman program though. I only had half the crust.
It's highly dependent on what's in the quiche, right?
Yeah, that's true. That's true too.
Are we talking spinach? Are we talking like ham? Like what are we talking about here?
They do like a spinach and feta one where I go. It's not my favorite, and I like both of those things, but I don't love them in the quiche. I don't know. Maybe I'm just not like no feta in the eggs kind of guy. Feta's weird in eggs.
Could be.
You know.
All right. Enough about the quiche. Let's talk about
the shirt is from Chubby's. They're actually very popular. Well, my girlfriend laughs at me. We go out downtown sometimes on Duval Street, and like I'll always pass somebody who's wearing the same shirt. So it's not unique. It's not unique. It's not.
Do you guys make eye contact and do the nod?
We honk our horns at each other.
Very good. Very good. All right, let's talk markets.
Listen. So shout out Dan Marquise, met up with the big man himself in Toronto. I just spoke to him as well. He said the event was awesome.
Awesome.
And that's cool. That's cool that you guys met. So yeah, Chris Verrone on today. I think that's awesome. That's a treat for us because there aren't many people I'd rather talk to and kind of get their views on what's gone on over these last 2 weeks or what hasn't gone on right? All this to do about nothing at this point. We are repairing so much damage, and that's exactly what I want to talk about this morning. So let's kick it off with the indexes. I think we got a little piece of bacon in there. I think we talked a little bit about this yesterday. This chart, exactly, right? I talked about some big levels, right? This is now a rebound attempt. It's a counter trend move simply based on the last wave, right? So we're being very tactical here. I'm not talking about the primary trend, right? But by definition, if we're trying to retrace a drawdown from July, right, this is counter trend in nature up until the point where we retrace the full 100%, right? So you got to start with 38%. That's the first Fibonacci retracement number that we pay attention to. 50% is not a Fibonacci number. It's fake. All the charting platforms put it in there, take it off, right? So we got 38% in the NASDAQ. Then we went on to get 62% yesterday. Beautiful follow through. Look at how we gapped and ripped right through that VWAP from the pivot highs. Love to see it. Buyers now back in control of the short-term trend. Can it be messy here? Would I be shocked to see some chop around this VWAP? No. Super bullish if we don't get it, right? Say we just blast right back to those old highs. I don't think so. That's not the bet that I want to make. It could happen. Anything could happen. That would be super bullish. I would think we get a little digestion here, right? NASDAQ's up like 15% in less than 2 weeks from the lows from last Monday. So a little bit of, let them dance, a little cool off here, a little bit of backing and filling, very logical level. But once you get 62%, then you're looking back to 100. So those July highs are really the next stop if we hold the gains from this week and really yesterday. Next chart. Same thing with the S&P. Actually leading, which makes sense, right, Spencer? We talked about the culprits of this sell-off are really mega cap tech. So NASDAQ, the worst, the hardest, and that's already back through to and through the 62%, reclaimed the VWAP. S&P got it done a day or two before, right? So again, next stop already, the July high. So the action this week, particularly over the past 3 days, past 3 sessions, you see these candles? Super bullish, right? Big bullish developments out here, reclaiming the levels that we needed to. So I think we could say buyers are back in control of the short-term trend again. Next chart. We had a question about, what will it take for me to no longer be cautious, right? Want to re-add some of that exposure that I took off of the past.
Maybe this.
So these are the biggest, most important stocks in the market. This is the Magnificent Seven. Look, they pulled back. It was a nasty sell-off for these names, some serious profit taking. I think it was like a domino effect of profit taking. It was like profit taking turned into a momentum trade with a little bit of volatility from Japan thrown in the mix, right? Make everybody a little crazy.
Yeah.
But when you look back at this chart now, logical level, former resistance, turned into support, back above the VWAP, right? So this basket of very important stocks, they're not all back above the VWAP, but as a basket, most of them are, right? Back above the VWAP from the July highs. Super positive. Next chart. We talked about a couple weeks ago, all of these tops. Spencer, we were talking about these tops, you and I, yesterday on Chart Request Live, right? I said, the best stocks, these AI-themed stocks, these cycle leaders, we really don't want to see these complete tops. They're undoing those tops now. They're really repairing the damage. Here's AMD scooping and scoring. We bought puts on this one on Monday. Ripped right through that support level. That's great. This is super bullish development, repairing that damage from a week or two ago. Next.
It's good that you bought puts on Monday.
Yeah, I mean, look, it's a defined risk trade. It was the right bet to make. We had a lot of long exposure, a little no short exposure. So you win some.
But to be clear, you're happy to be wrong.
Yeah.
Okay.
Yeah,
I just want to be clear about that.
Well, like our portfolio as a whole does a lot better in the case that we were wrong on that trade, right?
Yes.
So Micron, look at this one. Just absolutely ripping back. This chart looked terrible 2 weeks ago. Look at this. Huge move. So it's one thing to have a 42% sell-off. That's never good, right? But really repairing a lot of this damage back to and through 100, undoing this top, failing this top, reclaiming some big levels. Next. Dell, this is a big one. Filled that gap. Not all gaps are filled, but boy, this one happened quick once they got in there. Reversed it higher, undoing this top back above those pivot highs from March, back through that gap zone. But again, Dell down 50%. So let's see it continue to move higher. For now, not a top. That's bullish. And then there's one more.
Yeah, this is the one I've been waiting on.
This is one of the AI darlings.
This is the one I've been waiting on because you mentioned it yesterday. I sort of scoffed because it's been a pretty bad
Terrible.
5 months now.
It's been bad all year, right? It's been printing a top all year. Then it looked like that top was completed. Boy, if this thing could scoop and score back into the 700s, super positive for the broader market. Again, you want these big AI winners. They don't have to continue to lead the way we saw them lead last year, right? But they do have to continue to trend higher on absolute terms. So we don't want these to be tops. I think Supermicro undoes this top next and goes on to look more like Dell, AMD, Micron, and friends. So it's not just the AI trade. That's a big focus. We just did mega cap tech. Now let's look at some other areas of the market that really got rocked after showing some strength in early July. So hit up the small caps.
Also, something to mention with all these, right, is tradable bottoms, right? All of them, tradable bottoms, levels to lean on. Also, thank you for mentioning this in the chat. Today is the third Friday of the month. Options expiration. Keep that in mind, especially if you have orders going into the close. Be mindful of that.
Yeah, everybody's talking about this Bad Monkey show. No, we haven't really heard anything about it down here, but we're excited to watch. I love Vince Vaughn, so looking forward to it. Is it out yet, Spencer? Do you know?
I think it is, but I don't know.
Okay. So look at look, Russell 2000. We ripped out of the space. We thought, what a decisive resolution. We get into this coil, which is drawn in the second set of blue lines here. Fails miserably. Hard retest, but now finally bouncing off of this base breakout level. And Spencer, it was lackluster. The action was really no bueno up until yesterday. Finally got a good move out of the Russell 2000. And I think that's pretty significant. What the IWM up 2.5% yesterday, finally moving out of basically a little coil that had formed down here at the base breakout level. If we zoomed in on a daily chart, you'd see it a lot better. Next chart, big development being driven in large part by these guys. So the regional banks, same thing yesterday. Finally, a big up day. Gave a little bit back into the close, but still KRE up 2.3% yesterday. That's big. Undoing this kind of failed breakout here, right? We broke out of this range, then we failed, fell back into the range, and now yesterday's strength kind of put us back out of that rectangle formation. Big development. What's next? The biotechs too, right? So when you think small caps, you want to think, do the biotechs next.
That one.
Yeah. So when you think small caps, you think regional banks, you think biotechs. Biotechs had shook back into their multi-year base that we had just broken out of, and now repairing that damage, moving once again out of the base. Maybe we look back and we call the past 2 weeks or the last couple of weeks just a false start, right? And this is indeed a textbook primary trend reversal, just a little bit sloppy coming out of it, which is kind of standard. We see this a lot. Now go to the Bank of America. It's not just the small banks. We're seeing the big boys repair some damage. Here was Bank of America with a very similar pattern, right? Look at that damage, fell back into its range, back into the box. Looked like it was undoing what was a beautiful primary trend reversal. Now it's working higher again, right? So we probably look back at that. So that was just a false start in Bank of America as well. What's next? Internationally, this is big. I was looking at Sweden, Belgium this morning. EWK breaking out of a base. EEM looked a lot like Bank of America, shook back into a base, and now it's kind of trying to move out of it again. The German DAX was printing a top, looking like Micron and some of these other charts, albeit on a shorter time frame. Now hooking higher, undoing that top, failing that top. This is a truly important international index in the German DAX. So another bullish development. My point is, it's not just bullish developments repairing damage in big cap tech this week. It's across the board. We're finally seeing from small caps, the regional banks, the biotech, the speculative stuff. ARK was up huge yesterday. The IPO index, small cap growth was up huge, right? That's all really big, and also internationally. So all kind of coming together out here. This was a big week for the Bulls. They scored a lot of points, like I said.
Louis Sykes chiming in our chat here. Don't forget New Zealand.
Yeah.
We don't have the chart. But,
yeah. ENZL. It's trading at its highest level since really December of last year, early January. So, I want to get Louis on here because one area where I'm not seeing a lot of improvement or damage being repaired the same way that I just talked about in the equity market is the cryptos. And I think that's an important one, right? We want the most speculative risk assets, the riskiest risk assets to start trending well again, repairing some of that damage. So we're looking at you too, Bitcoin. Solana just keeps blowing it. Can't get it done. Can't get through these range VWAPs. So should we bring Louis on and talk about that?
Yeah, sentiment for the last few days can be summed up as in Louis' free daily crypto note. The chart of the day for the last 2 days has been not crypto related.
Huh.
So I think that kind of
Imagine that.
All right, where's my Louis? There it is.
Give me some.
Good morning, guys. Fantastic to be with you.
Who is the most zen on the analyst team? I'm thinking maybe. Well, let's think about this. I don't know, Louis. You see the question in the chat? It's definitely not me. That's not.
Are you sure about that? You might be selling yourself short.
No, I bring a lot of things to the table, Louis. Zen is not one of them. We have a lot of zen guys, though. It's not just Louis. Ian, very zen guy. Right? He does hikes in the woods and stuff. Like Sean
is pretty zen.
But he would get most zen. He would win most zen at ASC. And Fonz is really zen. Fonz is
really,
too, you know.
That's interesting. You know, it's really difficult not to be zen when you live in New Zealand. I've just been over the South Island over the last 2 weeks. Fantastic, just amazing country. Some of the most gorgeous countryside that you'll ever see in the world. It was amazing.
We're gonna get out there. We're gonna get out there.
I know. I've been saying this. I've been here for like 4 or 5 years, like an all-star charts field trip in New Zealand. It would be a hell of a lot more play than work, but it'd be worth it.
It's gonna happen. It's a matter of when, not if. It's when.
I love the sound of that. All right, should we talk crypto? It's,
what is this chart that you are demanding to show?
What is really going on here? This is perfect. This is exactly what I want to talk about. What is up, Bitcoin? Get it together.
I mean, look, it's been like this for a while where these two have historically traded together, but more recently over these last few months, I've really just traded, you know, out of whack with one another, and you're really seeing that amplified over the last week or so, where you're seeing this recovery in the equities markets, but you're not really seeing that follow through into Bitcoin, into crypto. You're not getting weakness per se, but you're not getting that strength. And even when you look down the cap scale, like we're always looking for relative strength, right? Whenever there's a market correction, there's 2 things that you can do. You can let your emotions get the better of you, you can panic, or you can just say, hey, what are the relative leaders in this market correction, or at least following out of that correction? And there really hasn't been a whole lot within the crypto space to be pointed to. I mean, there's, you know, Helium. We've been talking about Helium. That's been a nice little trade for us. But other than that, it's just, you know, it's perfectly fine when it's like this. It's perfectly fine not to have conviction and to just be still and to be patient. You know, you're talking about Zen before. You know, this is a perfect example of that, where you don't need to have a trade on. You can just let the market shape up.
Are you seeing anything good beneath the surface?
It's a bit lackluster. You know, it really is. Just like what Spencer said there, the last 2 crypto charts of the day have not been crypto. Look, but so long as Bitcoin is above, you know, that 56,000, we've been pointing to that level for the last few weeks now. The bias is to the upside. You look at something like ETH, however, you know, we got that retest of that support level of 2,000, and now we're retesting that broken support up near 2,800, and we're backing away a little bit. So again, I think patience is the big theme within crypto. You just want to let these things shape up, and you're clearly seeing that be proven over the last week or so, where there's just been a lot of relative weakness.
Yeah.
I don't know what else to add, honestly. I don't know what even.
All right, I'll see you guys next week.
I don't know what to say to you because it's the same story.
So listen, this momentum here, the daily RSI 14 in the lower pane. Everybody, focus your attention on that for a second. This is hallmark momentum behavior in a messy sideways primary trend, right? You're not hitting overbought, you're hitting oversold. If you zoom out a little bit on the chart, it gets overbought, then it doesn't get oversold. It's messy, right? We got overbought readings, we got oversold readings. Now we're not getting overbought readings. This is messy stuff, really sloppy stuff, right? This to me is trendless. opportunity cost style momentum. How long this takes, I think, is really the question. If all of these positive developments, Louis, you saw the bit I just did about the damage being repaired in all these areas.
Sure did.
We don't want to make the bet that Bitcoin's going to come out here and Solana's going to come out here and complete some nasty tops while the rest of the market, is really thawing, establishing tradable lows and entering new up legs, right? But Bitcoin can continue to diverge, right? And that relationship continue to break down for far longer than it's been broken down for the past couple of weeks now, right?
Yep, absolutely. And
So,
so, I would like to see Bitcoin get above that 62,000, 63. There's so much confluence there. You've got that little Fibonacci, that short-term Fibonacci retracement, that 60, 61.8. You got the 200-day, the 50-day, and you got all these anchored VWAPs here. Not to mention it's the short-term pivot highs.
Yeah.
And so, if you want to see crypto participate with this strength in equities, then that's a pretty big level to be watching. And something like Solana, you were mentioning Solana before, you want it to take out that anchored VWAP, and some of the anchored VWAPs and make new highs.
Dude, I thought we were close yesterday. I thought Solana was going to, kick things off yesterday. The way Coinbase looked.
How about Coinbase? We were on that meeting, we were talking about Coinbase, and then it just gave it all up. And so, I mean, this is a pretty nice chart. You want to see Coinbase get back above 200. And you've been pointing to all these failed tops, and surely Coinbase just has to follow with all these other charts, right?
You would think, man, nothing has to happen. Here's what I will say: with how tight this coil is and how big this 200 level is, I think you could almost trade this in either direction for now. You're gonna get a big move out of it, right? The question is, which way does it go? If this thing prints some big bear golfer today, flip the book and buy the puts. No, I bought calls yesterday and the day before, but it poked its head. It poked its head through 200 a couple times now this week.
Mm.
The tokens aren't supporting it. It wants to go. This chart looks great. It's ready to scoop and score. It wants to hook higher. It needs Bitcoin and Solana to move higher too, though.
We were briefly talking in the meeting yesterday about how taking more of a fundamental approach here, with their diversification into their subscription revenues, and how you technically and theoretically could see the correlation that exists between Coinbase and crypto cycles begin to weaken as they diversify their income streams. That's really been the strategy for Coinbase here. And so it'll be interesting to see whether that manifests in the coming quarters.
They're not just trying to diversify those revenue streams. I mean, that for sure, but they're trying to smooth them, right? With subscription revenue, because this is a company that traditionally, listen, Coinbase made a ton of money. 2019, 2020, 2021, the last crypto cycle, this was a highly profitable company. That's not the problem. The problem was that when the bear market came, they were a highly unprofitable company. Investors don't like that. They don't like lumpy earnings, right? You make a ton of money one year, you lose a ton of money the next. That's tough. That's tough to sell to an investor. So they're trying to smooth that out so that they could ride out.
And they seem to be doing a good job of that.
I listen, they've done a good job at most things over the years. So, I think leadership there is as good as it is anywhere in the crypto world. If anybody can figure it out, I think it's these guys. So,
yeah.
With you.
Louis, your email this morning to the AC Crypto members said we can afford to be patient. I don't know if patience and crypto typically goes in the same sentence, but we'll see. I don't know.
Despite what everyone is telling you, there's always going to be an opportunity tomorrow, and it's perfectly fine to sit still and do nothing.
The sentiment for this space is still just wild. So I tweeted out this Coinbase chart a few days ago, and
then I saw. I know exactly what you're talking about.
These laser-eyed people with like a bunch of fake followers that are like always shilling stuff will like come in and start like reposting my tweet and saying crazy shit.
I think you're always going to get that, right? And so there's not really that much information from that, because you're always going to get it.
You can't gauge sentiment on Twitter for crypto because it's just crazy.
It's
crazy.
Constantly and permanently bullish.
So I told these people finally, because it's happened a million times already. It's been happening with the miners all year, right? They get behind these trades, and then I'm like, you guys blow it every time. Like, you tweet this stuff, you say crazy shit, you give the trade bad juju, and you ruined it. So I feel strongly that that's why the trade didn't work. Can't block all these people though. They just keep popping up.
Yeah,
I'm with you.
all right. Louis Sykes, AC Crypto, get his free daily note. It's in the description, and it's free. It goes out every single day at like 5 o'clock in the morning Eastern time. So check it out.
Appreciate
Louis,
it, guys. Have a good weekend.
see ya.
Thanks, Louis. You too, buddy.
All right, we're getting close to 9 o'clock. Let's bring on Kenny Glick real fast, see what he's watching today, and then we will talk about some other stuff.
It's been a long time coming. They ain't come for my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
What up?
Good morning. Wow, that's some background music there. What's up?
What are you watching today? ASTS again?
Hey, if you don't remember, this is the same stock that we kind of joked around about at $5 a couple of weeks ago, right?
Yeah, that
And,
was a long time ago.
here it is. So again, one of my favorite kind of moves to trade is a blue sky breakout. And if you don't know what a blue sky breakout, it's more or less a stock breaking all-time highs. And you really have no idea where it's going to go. So you got to go back to the old school way of trading, like 1999 style, when there was only options that traded in 2.5-point increments. So stocks would break 25 and there was nothing to prevent them from going to 27.50, and then 27.50 would get you 30, and 30 would get you 32.50. And that's what we got. So I'm just going to watch this bad boy today. So if it breaks out, they created option chains. And here's the fun part, kids. Let's take a look at the chain together, because this will be, I'm just waking up. It's a long night. There's only $35 calls out there today, right? So the shorts, and again, when a stock goes from 5 to 30, the shorts come out and they say, oh, this is going to definitely go back to $10. This is a bunch of junk, which it might. And again, that's my attitude to most.
I mean, I was in that camp. That was how many dollars ago was that?
Right.
A lot.
Right. So now there's no way to protect yourself above 35. There's nothing more than a $35 call today. So if this thing starts to go and the shorts are on the wrong side, it could start going crazy. So right now it looks like there's 35s for today. They probably extended it, somewhere, for next week or the week after. But today, if it does start to rip and break yesterday's highs, chances are we're going to 35 and 35 and beyond. But more importantly, the market, again, that 420 on the QQQ, just a 52-point bounce so far on the Qs, or basically a 56-point bounce. So you can assume that today might be one of those boring consolidation days. And I'm ready for that. So again, by 11 o'clock, if there's nothing happening, I'm probably going to be hitting the road. I'm going to watch ASTS to make sure it doesn't go back above the blue line. That's the magic VWAP today. It's around $31. And that's going to be my focus. So I'm not going to let this bad boy break down. And here's another thing. Yesterday, it was easy to short, easy to get. And today it's hard to borrow. So they're throwing that one out there also. So that sometimes adds to the short squeeze potential. And of course, look, when the kids love the name, they go back to the name until it stops working.
Yeah, I mean, I'm not seeing a super large short squeeze. I'm seeing a float. First off, the float took 150 million shares, which is not nothing. That's not a small float. And I'm seeing a short interest of like 17-18%, which again, not nothing. That's certainly high, but it's not insane.
Right. But I agree. But the thing is, I just look at it as the shorter. I know the shorter mentality. So when this starts to roll over, if it doesn't break down, they're going to cover today, and then everyone's going to get excited, and then hopefully we rip and break yesterday's highs. And again, if we don't, I'm all for shorting the stock. If it breaks down under 30, you probably will get the 2.5 points to the downside. So again, like I said, now that created options on this, it'll be a little bit easier to trade. You don't have to take the risk of owning the stock or shorting the stock. You could be buying calls and puts today, which is where I'm at. I love Friday option expiration. And, that's it. I do think we're going to get this, kind of a boring consolidation. We're due for a boring consolidation day after the, enormity of what we just witnessed over the last 10 or 15 days. So
wait. Are we talking about ASTS or the overall market?
Yeah, I'm talking about the market in general.
Okay.
Right now. So, a little consolidation in the Qs, it's a welcome thing. But every time I think the market's going to take a day off, when we're in this rip your face off rally mode, we just wake up and explode to the close. So again, I'm not going to be here at 4 o'clock today for sure, but we'll see what kind of action we get this morning. I'm just going to stay focused on this ASTS, and I'm going to look at what was the other one that Alibaba was all right, was interesting yesterday, but usually I don't go back to the Chinese stocks. You've had it was a beautiful reversal yesterday on the earnings report. Walmart was kind of boring, so I'm not going to go back to that one. But staying focused on a couple of specific names today, and we'll see what happens by 11 o'clock, and then the pickleball carts are calling.
All right, guys, if you're not in Kenny's room, he was talking about ASTS like weeks, a month ago, more, maybe. I'm not even sure, honestly. So check it out. It is the link to join is in the QR code right there on the screen. It's hitthebid.com. Is there every day rocking through names at the open, and you don't want to miss it. So, Kenny, always a pleasure.
Rock on, brothers and sisters. Have a great weekend. I'll see you guys on Monday.
Your Friday. Enjoy some pickleball, and we'll see you next week.
Yep. Be good, guys.
All right. Summer Friday, low-key day when you've been crushing it like he has on ASTS, you can afford to take a short day. All right. 9:05. We're gonna have Chris Verrone stop by in a couple of minutes. Walk through what he's seen out there.
We got any earnings we got to hit?
Not really. We've come to the end. You mentioned, Nvidia yesterday. They're always off cycle, so they'll report in a week or two. When is Nvidia report? But by and large, yeah, they're August 28th. But there's nothing. I mean, there are things, but they don't matter. Like H&R Block. Do we care about H&R Block? Probably not, right? Do we care about what else was on my list this morning? I don't even know. That's kind of the point, right? Do we care about? I mean, we had applied materials, which I guess is okay. They're somewhat important, but
it's an important space right now.
Yeah. All right, I'll give you that. I don't think we have the chart, but it's down 3% this morning on their report. I think it was higher. I think it was up, and I think gave those gains back. Let me check. Yeah, it was up after the bell and kind of gave those gains back immediately. But it was an okay report. Earnings came in above estimates. So did sales. Guidance was in line. Yep, for the fiscal year. So it was all right. I don't know.
Look, a lot of these stocks have been up for 6, 7, 8 straight days now. So
yeah,
even Nvidia is down 1% pre-market. The tech indexes are down slightly. So maybe they give it a little bit back today. I think that would be normal, constructive, healthy. Right.
Not much in the way of like movers that I care about today. A lot of names like Danaher, Lumen, which is one of these high flyers, which is insane. Patrick and I were talking about this like 2 weeks ago. Couldn't believe it then. Couldn't believe it now. Of course, this morning it got downgraded at Wells Fargo, which I always find funny when the analysts chime in on a stock that's up like 400%.
While we talk about earnings, I just want to say China continues to look more and more interesting. The way that Baba reacted to what was a mixed earnings report, really, I think is super positive, right? For me, it stands out more when a company misses or puts out mixed results and the stock still reacts positively, right? Especially a chart that looks like Baba. Been in a downtrend for almost ever now, trying to carve out some sort of a rounding bottom, reversal pattern, right? Bad earnings report or a not so good earnings report and stock still higher. Love to see that. Maybe it will be China's time soon. JD.com, something similar, right? The two big online retailers out there. I don't know. VIP Shops just reported. I think they report next week. Vips. So keep an eye on some of this. Keep my eye on some of these. Baba, if it opens where it's trading pre-market right now, will be at its highest level since mid-May. Not bad.
Of course, I have puts on the one Chinese stock that is holding up relative to the rest. But
the PDD, you still got those puts?
They're for next year. Okay.
Those are the ones you bought when I bought them, like a while ago.
I bought them like 7 months ago.
Yeah.
I bought them after the Super Bowl. I saw all those commercials. I was like, this is no way. This isn't a scam.
Why don't you sell them?
Because
Okay.
yeah, I'm at this point. First off, it's like a tiny position, but I might as well just hold it to expiration. It's costing me, very little to hold it. So, but yeah, hasn't been a good bet. Put it that way.
I don't know what you're talking about, Stephen Weitzel. I think he likes China too.
He'll be on the show next week.
Good.
Yes, Tuesday. So that'll be fun.
Strazza, be careful. Baba had a big sell-off due to the Chinese bank loan news, but it flipped. Yeah, I don't know what you're talking about. That's okay. I wouldn't overthink it. I wouldn't overthink that.
As far as headlines go, the only headline that I'm seeing that is being talked about today is Kamala Harris released her, economic plan, whatever. And it's always hard to know how much of that is like just posturing and saying what you think will get you elected versus like things you actually intend to do, right?
I heard there was no plan, so there is a plan. A plan is good.
Yeah, well, it's not the most detailed thing in the world. Like a lot of things, like she just said, and there was no like details about how, but some of them had details. There was some stuff in there about some child tax credits, some incentives for first-time home buyers, some stuff on the pharmaceutical industry, and the interesting was the grocery stores. That was a weird one that they're going to combat price gouging at the grocery stores. I'm not quite sure how they intend to do that, especially because grocery stores is not a high margin business to begin with. So not really sure how that will go down. But
Isn't it amazing? They always pick on the industries and sectors that really can't be picked on. Airlines, literally, these guys make no money the way it is, right?
Yeah.
Grocery stores, energy companies, banks. Go pick on the tech companies who have 40% margins, for crying out loud.
Yeah, or pick on McDonald's for like a $10 Big Mac because we don't need McDonald's. No one needs McDonald's.
It's
Right?
Listen, these things, Spencer, as you know, they sound good, but they're hard to do.
Yeah, that's my reaction to like every campaign promise ever, which is like, okay, whatever.
Great.
I'll see it. I'll believe it when I see it. Right? Whatever. Right? Say what you're gonna say. Say what you think will get you elected. Fine, whatever. But
Sean and I had such a lovely conversation with our friend, Milton from the Trade Exchange yesterday. We were taping an Off the Charts episode it'll be out next Friday.
Yep.
And honestly, we went for like 45 minutes just on the topic of news versus noise, what it means, why it matters, right? And it's nice. We're humans, so it's lovely to know the why for these things, for why markets are doing what they're doing, right? But a lot of the times we're guessing. We really don't know. We could surmise, we could presume things. But at the end of the day, why doesn't matter. It's what is the market doing that really matters. And then you act accordingly to that, right? The why shouldn't really affect your decision making that much. It's like I said, it makes us feel better as humans to know why or think we know why. But at the end of the day, does it matter?
I ask myself that a lot. And I've really in the last few years started to really change my view. Maybe it's like burnout. I could just be burnt out of the news. I'm not really sure, but for so long,
Yeah.
I was so focused on the news flow and what it meant and why and the why, and like I don't know if I care. I don't care as much as I used to, and I don't know,
Spencer, I've been there.
if it's just like a
Yeah.
change, if I'm like getting older and more cynical or less cynical. I really don't know how to interpret that.
Probably skeptical.
No, I've always been I've always been skeptical. I'm skeptical of everything and everyone.
What I'll
That's like-
say, news flow fatigue is real, though. News flow fatigue is very real.
Yeah.
I got to the point a while back where you just get tired of hearing the same shit over and over and over again. I stopped listening to podcasts. Like it happens. Sometimes we need a break.
Yeah. Yep. So that's
I'm
kind of
excited
where
to talk to Chris. Do we have him in the back?
he'll be on, and I just sent him an email. He'll be on in a minute. He's trying to join as we speak. So when he that's a funny one, Dawson. Yeah, stage one. All right, maybe. I don't know. I don't know.
What is the quote that always gets attributed to Winston Churchill that I think is not Winston Churchill about, like, basically as you get old and crusty, you become a Republican?
I didn't know that he said that. I thought that was just like a known phenomenon, right?
There's a great quote about it. They
yeah.
know in the chat. Somebody in the chat knows. It's like, when you're young, you're crazy if you're not a liberal. When you're old, you're crazy if you're not a Republican or something.
Shane Gillis said being a World War II buff is early onset Republican.
Yeah, he's great. He's great. That's so true, though. It is true.
Which is yeah. I mean, I'm not a World War II buff per se yet. I could be one day. Okay. Before Chris joins, let me. Why don't we do the hot corner real fast?
There's really
because I know we had it wasn't as robust as yesterday, but I know there was some stuff in there. Let me make sure we have it before I even.
I'll say some things about it.
Do we even have it? Actually, you know what? Hold that thought.
Sure.
Chris is here. Let's just bring Chris on. Then we'll do it after.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Chris?
Hey, guys, what's going on?
Not much. Listen, there aren't many people that I'd rather have on this week with all this action that we've had over the past 2 weeks now. So let's dive right into it. Let's start, what everybody has been talking about and thinking about. We had a historic volatility event, almost 10 sessions ago now?
Yeah.
Last Monday. Explain to us, as if we were 5 years old, what the hell happened that day? Because it seems like a lot of that has already been erased, and it's like nothing even ever happened. So Bank of Japan, carry trade, what went on there?
I think it's interesting. I think a lot of it's been retraced or recovered in places that were not necessarily at the epicenter of the event, right? So to the extent to which people got caught off sides with crowded positions when there was some event that was unexpected. Now, I'm surprised that the event was called unexpected. I mean, BOJ had been articulating for months and months and months and months, if not years. Ultimately, we were getting to this point.
That's what I was wondering.
What I found interesting, and this was a little bit like waiting for Godot, where basically since April or May, even as dollar yen was continuing to go up, so even as yen was continuing to weaken, one of the things we began to see was all the Japanese exporters start to underperform. So like take Toyota, for example. Yeah. Toyota began to really underperform relative to the topics. April, May, June. And something just didn't add up there. If yen is going to keep weakening to 160, 165, maybe more, why are the exporters, which should benefit from that condition, starting to underperform?
So they were pricing in a stronger yen, maybe in the future.
Exactly, right? When a currency weakens, the exporters do well. When a currency strengthens, the importers do best. And I was thinking about that, and then I remembered some work we had done in like 2012, 2013, looking at the exact opposite condition. So if you remember, I'm sure you do, at the time, dollar yen 2012 was, call it 77, 78. And you were beginning this period of yen weakness that would be with us for the next decade. What was the clue then? All those exporters started to outperform. So there was a very similar dynamic there. And listen, I don't know if dollar yen's going back to 155 or 158, but I do think we've seen the top in dollar yen at 161 and change or something like that. I do think we've seen the top in dollar yen for this cycle. I would still continue to favor stronger yen here. So in the spirit of what has made it back, say U.S. equities are close enough to the highs. What hasn't? I think dollar yen hasn't even retraced 50% of the move from where it was. So I'm a seller of dollar yen here, kind of somewhere in this 149 to 151 zone. I don't think we're done there yet.
So Does this relationship with interest rates that we've seen be so strong over the past several years, does that continue to hold up, or is that changing?
I think it holds.
Yeah.
I've been, for lack of a better phrase, violently bullish bonds. I remain violently bullish bonds. I have found my best calls are when I philosophically disagree with what the charts, but listen to the charts regardless. And philosophically, it's very easy to find yourself in this camp that, we're on this unsustainable fiscal path and ultimately rates will have to go higher. Yeah, sure, maybe. I don't know. But look at the charts. Particularly look at some of these European yields. Look at Italian 10s or German. These things are going lower. These things are going lower. I think this 380 level on US 10s is absolutely critical. As you know, the move from maybe 440 to 450 to 380 was quick. I think ultimately we're going to 3 or 3.25. Mm-hmm. I don't think we want that move to be fast, though. It would, reintroduce all the recession economic fears. I think ultimately we're getting there. I'd prefer it to be slower. Now, the market doesn't care what I prefer or not prefer, so will it kind of adjust as the kind of charts demand. But I've been bullish bonds. I remain bullish bonds.
So since really the middle of July, late July, rates came down pretty hard.
Yeah.
And I think if you ask people, hey, rates are going to come down quick to 380, what are tech stocks going to be doing? What are growth stocks going to be doing? I think most people's answer would have been they're going to be screaming higher. They're going to be doing great. Hasn't really been the case. I know we're repairing some damages these last 2 weeks now, but why is that? Does that have to do with, like you're talking about, the speed or the momentum behind the drop off in rates recently?
Strazza, I think it's because no one does the work.
Yeah.
Like, go back, look historically. Non-recessionary declines in bond yields have not been particularly kind to tech's relative performance, as counterintuitive as that may sound.
Interesting.
My favorite example is, so Fed paused in February 95 after the 94 tightening cycle. You got your first cuts in July of 95. It was the start of a cutting sequence, a non-recessionary cutting sequence.
Yep.
Look at tech's relative performance from mid-95 through mid-96. It was the worst part of that decade for kind of tech's relative performance as the Fed was cutting into it. What did best during that period? Financials. So I think in a lot of respects, if we're going to sustain the status quo of, trend in equities is up, the market's traded soft landing. If we're going to sustain the status quo, you want financials working in this market. And I'm frankly less particular or I think it's less meaningful if tech is involved there. I would also just note, I think we're in a little bit of an assessment period here in terms of the leadership, right? Yeah. We've rallied quickly back to the highs. What does the character of that move look like in terms of what's working, what's not working? I think what is still so unappreciated, it's been unappreciated probably all year, but really unappreciated here, is how good these REITs act. Like, go stock by stock by stock in the REITs, whether it's a residential REIT or, I know, listen, you guys look at what I look like, you certainly see them. You'd be surprised how few people in my world are looking at these things and seeing them.
These charts look great. They have to be pricing in lower rates, right? Because they have the same balance sheet problems as regional banks. No,
I couldn't answer the question on the balance sheet problems. I think the consensus is very kind of focused on that. A mentor of mine used to always say, Chris, pay attention to what the consensus views as the most vulnerable part of the market, and simply ask yourself, is it acting like the most vulnerable part of the market?
Right.
And if it's not, you're probably okay to make some money there. Like, I love when there's a big divide between reality and expectation, right? I think the expectation is that these commercial real estate stocks, particularly with exposure to New York, San Francisco office or New York office, are super vulnerable in the next downtrend. Okay, maybe, but they act right here. We just added we put on Simon Property, SPG, Vornado, VNO. Look at Cousins, CUZ. I mean, these are things that were just totally neglected, but have been legitimate relative trend changes kind of playing out all year.
So, all right. So what Chris is saying ultimately is we're looking at these real estate charts, commercial real estate, but really all of them, all the subsectors, they look pretty excellent. A lot of rounding bottoms, right? Fresh trend reversal patterns. However, over the past several years, they're telling us that the black swan is commercial real estate. Some magazine covers probably right behind you somewhere about, the death of commercial real estate. So talk about how sentiment, like when it's completely washed out like that, the charts are doing something different, speaks to basically an offsides in the market, right?
Yeah, I mean, listen, I think like sentiment, I think is only contrarian maybe 20% of the time. Like sentiment confirms the trend often, right? You need bulls for bull markets, you need bears for bear markets, et cetera, right? All lines we've used and all lines we've heard. But the real interest is when the consensus becomes so attached to a story where they stop doing the work.
Yeah.
And I think people have stopped doing the work on these stocks because clearly I think the market's articulating the story has changed. And whether or not you want to open your mind and kind of think about how, right? Kind of our process is imagine, then investigate, and then invest, right? Imagine what could look different than what presently exists. Investigate, right? How do we get from point A to point B? What's the historical precedents of this? And then how do we position in that direction? And I think that's particularly relevant with how we think about groups like REITs here. I mean, even utilities, they're probably overbought, but the improvement in utilities is not 3 weeks old. Like it wasn't coincident with the volatility we saw globally. You've seen these things turning all year.
Yep. So let's take this one step further. I'm going to try to overthink this discussion that we're having. You're talking about real estate. You're talking about being bullish bonds. Talking about higher prices for the Japanese yen. Gold looks great.
So good.
The strongest sectors over the trailing month have been all of the defensive ones. Is this bull market behavior? Am I thinking too hard about it? Are these risk off sectors? Are these the kind of groups that we want leading?
So here's how I'm thinking about it. I have found you can kind of go down dangerous roads in my career when you're thinking, okay, is this the leadership well, listen, the trend's up, right? So when I talked earlier about an assessment period, I think we're in a part of this advance where you don't get too cute because the trend is up, but you kind of keep your head on a little bit of a swivel for changes, or at least changes at the margin. So this is a business that I would describe that is, disproportionately impacted by little changes at the margin, right? That may hint at some bigger changes in front of us. So what are some things that I think are changes at the margin here? Bitcoin doesn't act great. Now, it can fix itself. It can heal itself. But I think at a minimum, don't we want to see it kind of back above 63,000 as quickly as possible, if not go on and make new highs, right? This kind of cornerstone of global liquidity, which has been involved the whole way, acting a little funky here. Ethereum particularly weak.
I couldn't agree more, especially with the way these tech stocks have been ripping the last 2 weeks. Like, where are you, Bitcoin?
I would add to that, Steve, if you look at Bitcoin and gold, for 2 years, they did the same thing. Different magnitudes of advance and decline, but they moved in the same direction.
Yes.
That relationship broken down the last few weeks here. And think about it. When they were moving together, easy macro call, right? Liquidity is abundant. Gold and Bitcoin, we know, generally do well in periods of abundant liquidity. They're behaving as such. But these last 4 or 5 weeks, it's like, okay, gold to new highs. Gold acts great. We've been using the $2,800 target. I'm still there. Why is Bitcoin diverging from that? Is that a little hint or a change at the margin? So there's one. Another change at the margin. The emphasis, I'm sure you guys look at it as well, that we've always put for almost 20 years in our work on what are the consumer cyclicals doing versus the consumer defensives.
Yep.
I wouldn't say it's a disaster, but maybe the trend is neutral.
Yeah.
I don't think we want to lose those, right? So in the spirit of the assessment phase over the next couple months, don't think we want to lose that lower. You could put beta. You could put beta in that camp. Now, if anywhere, where is the defensive leadership becoming more overt? I think it's becoming more overt in Europe. We put a note out earlier this week. What do the European bond yields know that I don't? Right. That was the title. Because look at these charts. German 10s, Italian 10s, Swedish 10s. I mean, So that I think is a more appropriate area to kind of say, at least initially, is something really changing.
Right.
On the other side, has anyone seen the move in Chinese 2-year yields the last couple weeks?
No.
Surging.
Really?
Which is interesting to me because I've kind of been in this camp. It's possible China might be trying to force some type of a bottom here, but you can't really make that call until the bond yields stop falling out of bed, because they've been falling out of bed for a year. Chinese 2s have been literally straight down. Chinese 2-year yields have been straight down for a year. So I find it interesting they've perked up here the last 2 or 3 weeks. I also find it notable that they haven't been able to kill Alibaba. I mean, they had Baba on the mat. They had JD on the mat, and they haven't been able to kill these. So just keep that in the ether.
That's another kind of sentiment situation, right? I mean, sentiment is just so washed out for a stock like Alibaba. We were just talking about it. They had earnings. The report wasn't that great. Really wasn't great. Stock reacted higher.
I mean,
they reported yesterday, Baba, or they indicated yesterday.
Yeah.
Stock, I think, finished flat. Yeah. I think you're risking $3 there. 76 is kind of the line in the sand. I think you're risking 3 to make like 80. I'll play those odds all day.
Yeah.
I would argue that it's still on the mat, though. Right?
No, totally fair.
Me?
I have a 1% position in Baba here. I think that's as big as it can be for a chart that looks like that.
Yeah, it's fair. How about the rest of emerging markets? India, anything? I mean, Latin America not looking great.
You know, it's funny. Some of the Latin America stuff starting to perk back up here a little bit. Look at this NU, that Latin Bank. What a chart. I mean, I think it speaks to the idea, and we'll see if these European banks can kind of respond with some vigor. But I think global banks are still largely in uptrends. I think global financials are still largely in uptrends. I would like to see these Euro banks kind of respond affirmatively to the kind of oversold condition over the last couple of weeks. We'll give them a little bit of time to breathe here. But like important stocks in kind of U.S. financials, I think we want to see Goldman make a new high. I mean, it's been such an important leader off the October, November lows of last year. I think we want to see BlackRock make new highs here as well, just kind of given that it is the index, right? So, you know, I always approach the markets as, what is the status quo? If the status quo is to persist, what needs to continue for that to be the case? And I think financials continuing, you know, maybe not as a dominant leader, but certainly involved, given how integral they've been the last 6 months or so, I believe is crucially important.
Breadth has been so good in financials, really, like whether it's insurance, the big banks, the capital market stuff, the broker dealers, the exchanges, the data companies, all really good. It was just like regional banks weren't buying in. And then July, all of a sudden, regional banks would get this huge move. It's like, wow, now everything's working. That was really erased pretty quickly. Are you overthinking the regional banks? You're just saying the rest of the group is working so well, just buy those?
82% of financials are in uptrends. 82% have their 50-day above their 200-day. I think they deserve the benefit of the doubt or the leash. That would be my gut.
Yeah, I'm with you. Let's talk about tech before we get you out of here. For me, it's, one of your colleagues taught me a long time ago, the best players should score most of the points, right? I'm talking about mega cap tech stocks, the AI trade. These guys have been so good. But then you look at charts like Dell, Micron, AMD, Super Micro, which is really a big cycle leader.
They're not great.
They're down 40, 50%. They look like tops. Like, I know they're repairing the damage out here now, but can we lose those leaders and the broader market still be okay? Or do we really need that damage to be repaired and these guys start trending higher again?
Well, I think you certainly would prefer the latter. I want to use, or I am using AMD as kind of my test case here. AMD is the first one that's either yesterday or today or about to have the 50-day break below the 200-day. It's right there. It may have happened yesterday. Cross yesterday. It's the first time it's happened there probably in 2 years. And it's kind of just in the spirit of, okay, this was, I think, 50 to 200 off the lows or something like that. Are we in some topping sequence? Stock's oversold. It probably rallies, but we're now raising the bar for what we'd want to see on rallies. And I think that's kind of how you want to approach tech here. I mean, if you look at whether equal weight or cap weight, kind of tech relative performance. So equal weight tech relative equal weight S&P, or cap weight tech relative cap weight S&P. Could you convince me some relative highs might be being made here? Yeah, you could. Right. And, in the spirit of kind of this assessment period, I think what this does over the next 2, 3, 4 weeks is going to be so crucial in identifying not just what the remainder of the year looks like, but how are the chess pieces set into 2025? And because there's nothing wrong, I think, with having a base case and then looking for things that could upset your base case.
Steve, though, when you say things like Dell, is Dell really one of your best players?
It's been, dubbed as one of these AI infrastructure names. It really has been a leader this cycle. So I think you put it in that group. What do you think, Chris?
I think looking at it here, I mean, you go back to what was the breakout? Spring of last year, summer of last year, 50 to 200. This has been a vicious correction. Not even a correction. It's down 50%. So call that whatever you want to call it, down 50. It's also a reminder that let's just not forget these things are cyclical. It's so tempting to put everything in this secular bucket. The best piece of advice I ever got was, one of the old timers in the business said to me, Chris, everything is cyclical at the end of the day. Don't forget it.
And semiconductors are especially cyclical. No,
yeah.
These AI
I was looking recently that 90. I might be wrong in the dates here, but that's 95 to 2000, which was the best 5-year run for semis ever. They still were drawn down 50% 2 or 3 times over that period or something. So I am curious, what's NVIDIA? NVIDIA is next week or 2 weeks? 2 weeks, right? The 27th, right? The 27th, I think. Does it make a new high on good numbers? Good stocks make new highs on good numbers. That, I think, has to be our kind of big tell.
How important is NVIDIA's report? I mean, is it really the end-all, be-all? Is it as important as everybody tells us?
Yeah, I think it's pretty important.
I think so too.
I do. I think it's important just in the sense that it's been the zeitgeist of the entire market for the better part of a year and a half. It's funny, when it was correcting, we thought it might go to 93, 94, 95. There was a gap around there.
Yeah.
I didn't even have time to pull the trigger and buy it with how fast it came back. And that in of itself is probably a lesson about uptrends and the power of uptrends. And good stocks in bull markets really don't give you a chance to add to them because you're just supposed to be there.
Buying oversold conditions and uptrends. This one's up 35% from its intraday lows last Monday.
Yeah. As you know, the trouble is when you go down 37, you got to go up about 45, 46 to make a new high, something like that. Yeah. So geometric math.
Throw up the XLK SPY chart. I think you could argue the equal weight might be a better way to look at this, but would anybody look back? I dropped it in. It should be the first chart, Spencer.
Gotcha.
Would anybody look back if tech stopped leading here at this level, same place where it stopped leading back during the .com, right, versus the broader market?
Would you be shocked?
Yeah. Would that be any surprise at all? This is an incredibly logical level, right, for that leadership to maybe turn a little bit or them to just take a break.
I think watch some of these internals on tech. If you look at it's the one place where even in late July when the new high data was surging, it wasn't surging here. It's kind of the one place where you began to see some divergences build. Some of those semis you mentioned, Steve, did not make new highs with the S&P on July 16th. They made new highs, 6 weeks earlier, early June. So you can kind of raise your alarm. And these are all the things we talked about earlier. When do changes at the margin become really important where it should affect one's positioning? And that's kind of what I'm most on guard for here. Respecting and continuing to play the broader uptrend, I think that's intact, but being open to what at the fringe might be beginning to look a little bit different.
If this bull market was ending now and we look back and we said, wow, July, those were the highs. would it be a good bull market? Would you say what that was a short bull market? Like, how does it compare?
It'd be short, and I'd be surprised ultimately. I still think we project to something like 6150 or something like that from the big breakout earlier in the year. That number rings a bell. I would be surprised. It would be short. I've had a theory the whole time, though, that this bull market would not end with rates at 5. It would end with rates at 3. Everyone was so worried about bond yields running away.
Right.
I don't think bond yields would have run away or would run away where it would be concerned if the economy was fine. I think bond yields falling has always been the message to watch your back. And that's why I'm a little bit more worried about Europe here, because these yield charts look like absolute death over there. And again, it's the one place where the leadership has gotten, I think, overtly more defensive.
One more thing. We talk about some of these, I guess some weakness in risk appetite indicators like the XLY, XLP, high beta, low vol. How about credit spreads? They kind of blew out, with the VIX and have really come back in for the most part.
Yeah, so I was looking at this in context of second half 21. So second half 21, you got a kind of a little temporary surge in spreads, but they never went back and kind of went back to the lows. And by late 21, early 22, well, the market call was still fuzzy, uncertain. The spreads kept starting to blow a little wider. I think he made a 6-month high in spreads, maybe second half of 21, and then it just kind of continued like that. I think in the spirit of this kind of assessment period, which I believe we should be in here, is going to be absolutely crucial. Like, okay, new S&P high with credit not doing the same. Okay, that's another little change at the margin. How should we interpret that?
Right.
I'm not sure that any of this is end of cycle stuff. But I think there is mounting evidence you're maturing in a cycle.
That's a great point, right? So it's maybe just more, it's a less conducive environment for risk assets, but really just speaks to later stages instead of the actual end of the cycle.
Yeah, I mean, the end of a cycle is stocks falling, right? The end of a cycle is not, I mean, we entered the day with 74% of the S&P above the 200-day. Right. The end of the cycle is S&P index at a new high, that number at 40. Right. That's the end of the cycle. I'm always reminded by, we have a good chart, just kind of looking at prior market tops. And if you compare the current top on July 16th, I think it was July 17th, July 16th, 16th, and look at it relative to like October of 07, right? October 9th of 07. October 9th of 07, financials had peaked 2 years earlier. Right. You had discretionary just puking over itself. So let's not confuse small tops with big tops. Let's not confuse corrections with multi-year top formations. I think that's an important distinction to make.
Yeah.
Would it shock me if we back and filled here a little bit after the surge of the last 6, 7, 8 days? No. But how do you position for that?
I know.
That's what I was going to ask.
Yeah, how do you position for that? It's like, I like more money is lost trying to trade around the trend than I think all money out there.
Yep. So, Chris, we have a big event in 3 months here, less than 3 months here. Does the election matter? Do you think about it at all? What does this mean for your work?
I didn't know you were going with that. The election. Does it matter? I mean, it matters from the context of we are, 120 days away from the presidential cycle being in year 1, and we know the reputation of that.
Yep.
It matters in the context of, I do think if new leadership emerges post-election, you're going to get the clues now.
Yeah.
My partner, Dan Clifton, has done some excellent work. It's remarkable how good this indicator is. Measure the S&P from July 31st to October 31st. If it's up, the incumbent party wins. If it's down, the incumbent party loses. You hate to say it's that simple. It's like, literally, it's like 27 of 28 for the last 100 years or something in calling.
All right.
So we're 2 weeks in for that indicator.
And we're down slightly, right? From 731, probably down slightly or flattish.
Yeah, we're right there.
Right there. So,
We're wonderful. So neither.
Interesting.
but like, what matters most? Remembering where we are, and it's going to be year one of a presidential cycle next year.
Yeah.
And I think that's a reminder that it's not the best part of the calendar.
Yeah.
I mean, all that stuff's at the margin, right? But important nonetheless.
That's a good way of looking at it. Yeah.
Anything important?
How about you? How do you answer that?
Me for the election? I think it's tough. I think you started to see groups like regional banks start to price in a Trump and then kind of have to undo that. So I think, volatile until we get there, or at least have some certainty. Like you said, the market wants to price this stuff in early, I think. But if the betting markets and the polls are showing them this even, I think it's hard for them to price anything in. So I think there could be some maybe uncomfortable volatility between now and then.
Let me ask you another question. If the entire street wasn't wrong with the 2023 recession call, would people be pounding the table now on a 2025 recession call, but they're just too afraid to be wrong twice?
That's a good question. No idea.
I've been thinking about that recently.
What do you mean by that?
Because you can't be wrong in this business twice if you're bearish. You can be wrong unlimited times if you're bullish, but you can't be wrong twice bearish.
So you won't.
And I think the whole street. I think the whole street was, totally dug in on recession 23.
Yeah.
And obviously never happened. The economy was remarkably resilient. I think the market knew it the whole time. Certainly the leadership seemed to know it the whole time. But as you sit here today, it's like, am I seeing a few things? Bond yields down, maybe credit a touch wider. We'll see if discretionary staples breaks. If it did, I think it would add another piece of where you should be thinking about what does like recession 25 mean, or should that be something on the horizon? It's not my call, but I'm so fascinated with kind of the behavior around this business. And I think if people weren't wrong last year, they'd be thinking about really leaning into that call for next year.
So the street right now, nobody's really talking about it yet.
No, I think they're afraid to.
It's an interesting thought.
Yeah, that
I had not considered.
A few weeks ago, I know spooked some people, and then I started hearing the hard landing stuff. But it was a while since I heard hard landing.
I don't like the fact that people or the market, or however you want to phrase it, are trading economic data this sensitively.
It's crazy.
I don't think that's good. I want to ignore economic data.
Yeah, I'm with you.
Right. I don't want to trade every claims print every Thursday. I don't want to trade every non-farm payroll print. I don't want to trade every retail sales print.
Wait, you don't care that housing starts that came in this morning are the worst since 2020?
I don't. What's D.R. Horton do today? They're probably up on that.
You're not trading the Fed index?
Yeah.
Manufacturing?
Yep. D.R. Horton, basically on the highs. I think good trends is, ignore data, right?
Yeah.
I want to ignore data.
Yeah.
I'll tell you what, though, if we're sitting here in a week, 2 weeks, and 10s have given back yesterday's move, and we're right back 378 on 10s or something.
Yeah.
I don't love that.
Right. You think that speaks more to recession than what the Fed's going to do?
I don't know what it speaks to. It speaks to be bullish bonds.
Right. So, all right, one last question. Bullish bonds, how about high yield? Because nice base there. Something like the HYG, that's a nice base.
Yeah, it's weird. When yields fall, don't you want to own IG? Don't you want to own duration?
That's what I thought.
My gut would be IG outperforms high yield if yields fall. That would be my gut. But I can't say with conviction either way.
What fund do you look at for that? LQD?
I mean, if you look at like LQD relative HYG or some other iteration of that, I believe this week, if you look at LQD relative HYG, or let's say it the other way, if you look at high yield relative IG, it went negative in our trend work this week.
Okay. Wow.
So I actually like duration. I like investment grade. I don't particularly like high yield here.
I mean, the base in LQD, just on an absolute basis, is great. Really.
Yeah.
Really clean. This thing looks ready to go. All right, Spencer, you got anything else? It's always a pleasure, Chris.
No, I got nothing. Chris Verrone, head of technical and macro research at Strategas Research Partners. Chris, thanks for coming on today, man.
This is a pleasure,
This
guys.
is great.
Have a good one.
Spending so much time with us. You're the best.
Yeah,
Thank
gave us a half hour of time.
Yeah,
More than
that's-
a half hour of time, actually.
We
So-
covered a lot. We covered a lot. The way he thinks is awesome. I love. Just go back and listen to what he said about economic data, guys. It doesn't help us. We have the trend, right? You could literally trade economic data every day if that's what you're into. I just don't know if there's any edge there.
I don't remember economic data ever being like the importance of it went way up during the pandemic, and then I don't know if it ever really came down. And I mean that from in the sense of like from a narrative point of view and from a trading point of view, like people were paying way more attention to like ADP because the numbers were way off, obviously, and then they normalized a little bit, but a lot of people, at least on my timeline, never stopped paying attention to those things when they weren't before. So
every cycle we get like this new economic flavor of the week data. You know what I mean? Some environments it's the CPI, it's the inflation stuff that really matters.
Yeah.
Other times it's like, oh, it's the jobs. Look at the job stuff, the unemployment stuff.
Yeah.
Probably something that like we gotta really pay attention to. You know?
Yeah. It's like every few months it changes. Right. It's like, oh, now we care about jobs. Now we care about the housing starts. Now we care about inflation. Now we care about that. And it's like, all right, sure. I don't know who decided that, but all right.
And which way it comes in changes too. Like, oh, it's hot is bad. Then no,
bad news is good news, Steve. No. Now good news is good news.
Dude.
Yeah. All right.
Way to just drive yourself freaking crazy.
All right. Let's just do some recess and get out of here. How about that?
I'm ready to go, man.
I'm for it. I have a good recess, I think. I just want to tell you about my adventures with an electric vehicle over the last week. So we rented a car in California. I said, dealer's choice, give me whatever you want. I don't really care. It gave me an EV. A Kia Niro, 2023 Kia Niro. I've never driven an EV for more than 30 seconds in my life. And it just reaffirmed to me that I will never own a fully electric vehicle because
why?
When you're away from home, it is wildly inconvenient.
Say more, I don't get it.
So charging, okay? In California, which has the most robust charging network,
they're everywhere.
Charging my car was not easy.
Really?
Okay? There's different. First off, there's all these different charging like brands, right? There's EVgo, there's ChargePoint. We saw at least 3 or 4 different brands, and they all require their own like app to like go in and do it on your phone and the whole thing.
These are all publicly traded. So the EVgo, the EVGO, the ChargePoint is CHPT.
I'm aware. Yeah. That's how I knew about them.
So you have to download an app and pay through your phone when you go to the charging station. You can't just like swipe a card.
I did discover that. I think you can swipe a card, but we didn't know that at first. It said get the app, so we got the app. The car tells you, the GPS tells you where the nearest charging stations are, but like you don't know, like you can't just drive around. You have to go out of your way to find one. They're not like on every corner like a gas station. They're in parking lots of strip malls. Also, it takes a really, really long time to charge a car. Yes, it is cheap. I think we paid like $4 when we charged it for like 3 hours. Paid like $4, but we charged our car for 3 hours one morning, and we got 30 miles out of that charge for 3 hours. So it was just wildly inconvenient, and it's fine if you have a charger in your garage, you can charge it overnight. I'm sure that's fine and that's great. But when you're away from home, it's just so inconvenient to have to budget the time, and like you can't just leave your car. I mean, I guess you could leave your car in like a strip mall parking lot overnight, but then you'd have to leave and go back and get it, and it's just not convenient at all if you're away from home to have a full electric vehicle.
How long does it take?
It took, like I said, we charged it once. We charged it for 3 hours, and we got 30 miles back on our charge, right?
So what do you do while it's charging for that long?
Exactly. What do you do while it's charging? We drove our first charging station that was EV Go that we couldn't even figure out. There was a guy there. He's like, yeah, I've been here for over an hour. I was like, just sitting in your car? Yeah. Just sitting in your car for over an hour, waiting for the charge.
The ball. When you rent a car, you don't say, just give me anything. You try to pick the nicest.
It didn't even occur to me that they would give me an EV. And also, I didn't mind. I was kind of curious. I was like, all right, I've never driven an EV before. I'll drive it. It drove great. It was a very smooth drive, very nice car. But just having the full EV component was just so inconvenient. And like sometimes the map is wrong. If there is, it says there's EV stations and there aren't. Sometimes they don't even work. Sometimes they're taken. There was a station across the street from our hotel that had 3 chargers. 2 of them were taken. What was I going to do if the third one was taken? I have to go try to find another one. I mean, it's just, I don't know, man.
Dude, I feel you. Sounds like a nightmare.
It was not fun. And obviously, I've got my eyes laser focused on the number. It says, you've got 18 miles left, 17 miles left. I think we got to the airport. We had 18 miles left to go on our charge. And I was like, I'm done. I don't even care. So, the battery was at like 10% or something. And I was like, whatever. But yeah, and hybrid is fine, I think, because you got the EV and you got the gas component. I would totally do a hybrid in the future. I don't have one now, but
you think hybrids will be more popular than EVs for this reason? At the end of the day, everybody's going like hardcore EV. Is it hybrids that are the answer at the end of the day, or at least like there's a transitionary phase? Elon Musk, he'll tell you, he swears to God, 10 years from now, we're all driving EVs. Are we all driving hybrids first?
To me, like having this EV added a whole other level of stress to this trip that I didn't account for. And like we tried charging it at a museum and like it didn't charge for whatever reason. And we're like, all right, that was a waste of 3 hours because we got no juice out of that. So I don't know, man.
All right.
Maybe we just like didn't know what we were doing. And of course we didn't know what we were doing. We've never had an EV before, but
I didn't know it took that long. I thought you like plugged it in and it was like, all right, you're good, you can go. There must be lines.
Chat saying that there are superchargers. I don't know the difference between a charger and a supercharger. I go where the map tells me there are charging stations, and that's where I go. I had no idea that it would take hours and hours to charge the car. If I had known that, probably wouldn't have asked for any or wouldn't have accepted the EV. But whatever. That was my experience. Great car, super smooth drive, Kia Niro. Not a fan of the charging. If you're away from home, again, if you have it in your garage, that changes the equation entirely because you just park it overnight and you plug it in. Also, at one of the stations, like someone had parked in one of the charging spots and was not charging their car. They just parked there. And you can't. This is 6 a.m. You can't stop. You can't enforce that. There's no way to enforce this stuff. At least with the gas station, you're in and you're out in 5 minutes, right? I don't.
Spencer is for charging port security guards.
I am.
We need humans. We need humans.
I'm just saying. I would never rent an EV again if I could help it.
Wow.
And if I didn't have a charger at home, right, I would never have an EV in general, because but then what's the point of having a car if you can't take it places far away from home? Well, so I don't know.
Well, you're not sounding like a good liberal right now.
I just, the whole thing again, it was stressful. Also, like even like this is how I knew I was like ill prepared, because it took me 5 minutes just to figure out how to open the fucking charging port on the car. Like I didn't realize like I had to like unlock the doors to open the things. The whole thing, man.
Right. And this was a Kia. This wasn't even this was a Kia.
It was a Kia. Yeah, maybe I'm just not intuitive. I don't know. Whatever. Okay, that's what I got. Hey, listen. Brand new episode of Off the Charts coming up right now. Strazza and Sean, you guys did a bit of a different flavor, right? You talked amongst yourselves about lessons learned in the last 2 weeks. So that episode is live on the podcast platforms. It is premiering on the YouTube in 3 minutes. So head on over to stockmarkettv.com. It's right there as well.
So
And,
Sean and I, thanks, Spencer. So Sean and I thought that this week would be a really good week. We actually taped the last 2 nights, and we figured, as traders who are actually in this market, getting chopped up a little bit, taking some big swings, trying to protect our the gains that we've made earlier on in this bull cycle, right? Some mistakes were made, some good moves were made. You're not. I challenge you to find a more honest and genuine conversation among traders and kind of how we navigated the volatility of the past really month. So I thought it was interesting. I hope you guys like it. We were just there just talking about what we've done, what we thought was good, what we thought was bad. We really don't know, but this is just traders looking back with a little bit of hindsight, just having a little conversation. So we figured we'd open it up and share it with you guys. We'll probably do more of that in the future.
Good.
And
looking forward to that. We'll be back on Monday. Full crew. JC will be here. Have a great weekend. Go make some money. And we'll see you later.
I'm playing 54 holes of golf this weekend.
Oh, my gosh.
At least.
Too many.
Bye, guys.